Now, we brought in Suresh Surana, who is our tax expert, to answer all of the questions on tax for NRIs. Suresh, thank you so much for joining us.
Thank you.
Our first question comes in from George Samuel. He tells us that he has a fixed deposit and he has to pay tax on that interest, but he's also taken a loan against that FD. He wants to know if he can offset the interest from the loan against the interest from the FD for tax. Is that possible? Also, he has a joint account right now with his wife and he wants to know if he can split up the interest from that joint account and file separately. Suresh, does that make sense?
Now, just because you have taken a loan against the pledge of fixed deposit, it doesn't mean that you can set off the interest against the fixed deposit interest income. Whether interest is allowed as a deduction or not will depend upon where that loan which you have taken has been deployed. So, if the loan has been deployed in earning taxable income, so for example, you have used the loan for buying a house property or for debentures, then against that income you can claim the interest on loan as a deduction. But just because it is a loan which you have taken against the pledge of fixed deposit doesn't mean you can set off the interest income and interest expenditure which is arising from the bank. Your second question is regarding the joint bank account. Again, just because the bank account is in joint name doesn't mean that the funds belong to both the parties equally. It really depends upon what is the source of the deposits in the bank account. So if all the deposits, for example, belong to you and not to your wife, then the entire interest income will be taxed in your hands. If it is mixed funds, then it will become a bit complex because you will have to ascertain what is the percentage of the beneficial ownership of the funds of each, and therefore it may be advisable to maintain separate bank accounts, even though may be joint, but clearly identifying the receipts and payments pertaining to each one of you. In case in the same bank account, so for example, if there is a second account holder and if the interest has to be apportioned, then both the parties have to give a declaration in which they have to give the ratio in which the interest is taxable, and accordingly it will be taxed.
Well, Neeraj writes in, he's an NRI, he tells us he wants to put aside some money in a debt investment for 10 or 15 years. Now, 75% of his money is already in equity, which tends to be tax-free. He wants to know, since NRIs are offered the tax-free fixed deposit of 9.25%, what would be a better option, a debt mutual fund or a fixed deposit? Suresh, from a tax point of view, which one do you recommend?
Yeah, Neeraj, as you rightly said, right now the NRE deposits are very, very attractive. So you can get a return as high as 8.25% to 9.25%. So for example, State Bank of India and other NRE deposits are yielding a very high rate of return. And this income is completely exempt from tax under Section 10(4) of the Income Tax Act. Also, the deposit can be for a maturity period up to 10 years. So these are fairly long-term deposits which you can have. I think given the fact that such high rate of interest and the fact that it is completely exempt from tax, and this is with banks which are with public sector banks or with banks which are regulated, and the liquidity, I think this really probably it is very difficult to better this kind of an investment option which is available right now. You are also able to borrow against these deposits because a lot of foreign banks are willing to give the loan against these deposits. So your effective yield can even increase beyond this rate what you are talking about. So I think to my mind the NRE deposit and the FCNR deposits offer a very, very attractive investment option in terms of debt.
Well, Rajan Swami has also written in. Now, he's an NRI who files his taxes every year and has a resident DMAT account. He wants to know if it's legal for him to have a resident DMAT account or should he change it to an NRI account right away. Suresh, what do you recommend?
Yes, Ranjan, whatever shares you are holding before becoming non-resident, you are allowed to continue to hold. There is no restriction on that. However, you will have to inform the authorized dealer as well as the depository participant where you are holding your DMAT account about the change of your status. Now, when you do that, they will open a new non-resident DMAT account for you and transfer all the existing shares what you are holding from your resident account to the new non-resident DMAT account. There is no tax implication of doing that because it is simply transfer from your own one account to another account. As far as the taxability is concerned, again, if you sell these shares which are held for more than 12 months, and if it is sold through stock exchange, there is no capital gain. Being a long-term capital gain, it is completely exempt from tax. If you sell within the period of 12 months, there is a short-term capital gain tax of 15%. So this is, and again in your home country, you need to check the tax implications wherever you are resident.
We have time for one last question, and this one comes in from PM Chandrasekharan. He tells us he invests through mutual funds using his NRI account in India, and he's chosen the dividend payout option, and this money obviously comes into his bank account. Will he be required to pay tax on that money if it exceeds a certain limit, and will he be required to file his taxes in India? If so, Suresh, what form should he use?
Well, Mr. Chandrasekhar, in case of the dividend from the units of mutual fund, the income is altogether exempted from tax. So it is not considered at all as a taxable income. And if this is the only source of income you have, you are not required to file your income tax return, because that is only applicable if your taxable income is exceeding rupees 2 lakhs. And dividend on the mutual fund is altogether exempt from tax. So you don't have to really file your tax return in India.